Meggitt said that it would be impacted by both the coronavirus outbreak and the halt in production of the 737 MAX after a year in which the aerospace engineers boosted profit by 33%. Shares in the British firm fell 3% as markets opened. Read more. BAE Systems sees profits rise as aircraft contracts pay off. The figure's statutory profit before tax increased from £216.1 million in 2018 to £286.7 million this year, as the firm kicked on despite disruption to its supply chains and the long-running 737 MAX saga. Revenue grew 8%, from £2.1 billion to £2.3 billion, as the company grew in all three of its main business areas, aerospace, defense and energy. Meggitt reported £267.8 million in free cash flow, a 60% increase on the year before. The blue chip stock also reduced net debt by 15%, reducing its balance sheet from £1.1 billion to £911.2 million. Earnings per share grew 24% to 28.8p, while the company declared a dividend of 17.5p. Why it's interesting. Meggitt said that although it was anticipating a hit from the coronavirus impact, it nonetheless expected to deliver growth in both revenue and operating margins in 2020. Sign up to City AM's midday update newsletter, delivered to your inbox every lunchtime. The announcement comes after the FTSE had its worst day in 3 years yesterday, shedding 3.3% as the market reacted to growing fears of a potential pandemic from the coronavirus, which has now infected about 80,000 worldwide. Meggitt will also have to contend with the ongoing shutdown in production of the Boeing 737 MAX, which has been grounded since last March after 2 fatal crashes. In recent weeks there has been renewed optimism from Boeing that the plane will be licensed to fly again this year, with company officials estimating it could be airborne by mid-summer at the earliest. The firm also said cash flow would be impacted by its move to Ansty Park in Coventry, as well as further investment in carbon capacity. What Meggitt said. Group Chief Executive Tony Wood said, over the last 3 years, as a result of the successful execution of our strategy, the group has become a more focused, higher quality and more resilient business, reflected in the delivery of strong levels of organic growth and cash generation. Read more. Babcock chief steps down after 4 years in top job. We delivered another strong set of results in 2019, with organic revenue growth of 8%, ahead of our raised guidance, and good performance across all end markets, particularly defense. Our performance was underpinned by growing end markets and strong execution across our teams during the first full year of our new customer align organization. For more on this story, visit the news article link.